So today we are looking at financial disclosure for business valuations and income assessments with Paul Mandel, Melanie Russell, and Jason Kwiatkowski. Hi, Melanie. Great to see you.
Nice to see you.
You as well. Hi, Paul.
All right, Daphne. Thanks for having us today.
Thank you for joining us today. We really appreciate you donating your time and sharing your knowledge in the session. So today our panel will be discussing financial disclosure for business valuations and income assessments. So this entails types of disclosure, requesting disclosure, CICBV professional standards, federal child support guidelines, shareholders, and business owners. As always, we encourage you all to participate in any polls and use the chat feature on YouTube throughout this event. And all resources mentioned will be included in the YouTube description. And if you registered, you will receive it via email later this week as well. So it is now my pleasure to introduce today's panel. We have Paul Mandel. Paul is a valuations and litigation support partner working out of the Toronto office. He is a senior business advisor and leader with more than 29 years of experience. Paul assists clients with corporate valuations, including valuations for income tax, disputes, planning, and regulatory purposes. Thanks for joining us today, Paul. We also have Melanie Russell. Melanie is the founder of Calyx Valuations, Inc., which she founded in 1996. Look at her showing off the Summit mug. I love it, Melanie. Throughout her professional career, she has been involved in many valuation and forensic assignments for a variety of public and private companies of various sizes and across many industries, obtaining her training at two of the largest international accounting firms. In family law matters, Melanie gets involved in valuations of business assets and income for support purposes, tracing, and forensic reviews. Melanie placed second in Canada on the CICBV membership examination. Ms. Russell has been active in teaching business valuations and related topics since 1987 at various universities and professional organizations, and runs the premier preparatory course for CBV students in Canada taking their national membership qualification examination. She was elected/designated as CPA Ontario Fellow in 2023. Thank you for joining us today, Melanie.
Thanks.
And
thank you for the mug. Thanks for the mug.
My pleasure. And last but not least, we have Jason Kwiatkowski. Jason is a founding partner and the president at Valuation Support Partners, Ltd., a professional services firm specializing in providing the business and legal communities with business valuation, litigation support, and exit planning advisory services. Jason is an independent financial neutral and has completed numerous business valuation and expert reports, including income assessments for various purposes. Jason has testified before the Ontario Superior Court of Justice as an expert witness in business valuation and damages quantification. Jason has authored many articles and has spoken before various professional and business groups, as he's doing today. And I will now hand things over to the panel to get started with their presentation.
Russell, so first thing is thank you. Thanks, Daphne, for that introduction. I just want to clarify, I'm with MNP LLP. We got a sort of series of questions. I don't know if we're going to read them out, Melanie, or right, we want to respond.
So one by one. I think we're going to do a poll first, right? With first poll. Oh, poll is launching. Okay, Daphne says the poll is launching. So here we go.
What percentage of files do you feel as though you have sufficient disclosure? Almost always we have 13%. I usually want more, 68%, rarely 15%, and not applicable 3%.
It doesn't actually surprise me. There's always sort of a desire to get more information and to have more line of sight into the client and what's going on there. Melanie, are we going to read off the questions? Like, is someone going to read for me the first question, and I'll address it?
Yeah. So first, why don't I admit for you?
Yeah. Well,
what's the minimum versus desirable disclosure required to do valuations, both of business and income?
So that is a terrific question. And the way
Thank
we
you.
sort of, yeah, it is a terrific question. The way we kind of answer these, right? You ready, guys, for the drum roll? It depends, right? Like, it honestly depends on the file, the issues. There are certain documents that we must have and certain information that we must have. So before we kind of delve into that, I want to kind of cover off a couple of sort of ground kind of issues. So first thing is there's different types of valuation reports. There's a calculation, an estimate, and a comprehensive. And the difference in our professional standards, it actually says for an estimate, you do more due diligence than a calculation. And for a comprehensive report, you do even more due diligence. What's due diligence? Review of documentation. So it actually doesn't say in our standards what exactly it is. It just says that you should do more. So the more you have a live issue or the higher level of reporting, the more information we're going to want to see. Next concept I sort of want to introduce is there's 3 types of financial statements that we look at. The sort of bottom level is a compilation or notice to reader. The middle level is a review, and the high level is an audit. What's great is as you go up, those financial statements have more notes and more information in it. So sometimes an audit will give you a lot more information, or it always gives you more information than a notice to reader, but it still doesn't preclude us from needing additional information. The next concept I kind of want to introduce is managing disclosure. A big part of mine, Jason, and Melanie's job is actually managing all this disclosure and getting it. It takes a lot of time and a lot of fees for us to kind of get the information we need. So when asking for things, sometimes we want to think about cost benefit. But a file that sort of stretches on where you're asking for information, waiting for it, getting a portion of what you asked for not all of it, will tend to have much higher fees than a file where everything sort of gets put on our plate on day one and delivered to us on day one. So we want to kind of always manage that during the process. I also look at sort of another couple of concepts. When we're writing to the other side or opposing parties asking for information, they'll send us some of this stuff and then they're silent. I said, if you don't have it, let us know. Just say it doesn't exist. We don't think it's applicable, but give us the reason versus being silent. That helps move the process along. So turning back, I kind of said what the minimum versus desirable is sort of a variable in that. It depends on the issues. It depends on the valuation approach. It depends on the industry that we're looking at. But kind of like the one core document that we need in everything, whether it's a business valuation or guidelines income. For business valuation, it's the financial statements. And for guidelines income, it's the personal tax returns and the financial statements for companies which they have access and control. Melanie, there's anything to add?
No, not on my end. I just one little technical thing. You'll probably see things being, Paul just talked about levels of review of financial statements. So now you used to see notice to reader, but now they're all called compilations, just a technical thing with the CPA associations. Good. So on to number 2 or anything, Jason, any comments to add?
No, I think that was a good summary.
Okay, good. So, so Paul introduced a concept of how much disclosure enough, and it's ultimately sort of a professional judgment. It depends, but it's nice to see what kind of boxes we have. So one of the boxes Jason's going to talk about on the child support guidelines, and I'm going to talk about another box. So of course, we always as CBVs, we will look to our standards to say, is there any guidance that helps us determine how much disclosure we should be asking for? So a couple of introductory comments. I'll go through a couple of the standard sections, but in general, the CBV Institute says it's up to your professional judgment. So whether you're doing a calculation, an estimate, a comprehensive, or an income analysis, it depends, and it's up to the evaluator or the expert to make that decision. The second sort, and I'll go through a couple of sections on that. The other sort of general rule is we're now, or not general rule, but are the standards that govern valuations are changing because there's an exposure draft out there, and there's even more emphasis on adequate disclosure, but not just making sure you have adequate disclosure, but disclosing if you don't. So I'll talk about those, and that's you'll probably see some changes in reports coming forward, but. So in one of the standards, the current standards before the exposure draft, it says it's expected that the scope of review will be more comprehensive for a comprehensive valuation report and progressively less comprehensive for an estimate report, and then down to a calculation, as Paul said. But that's about the guidance there, right? The valuation report shall provide sufficient information for the reader to allow the reader to understand how the valuator arrived at the conclusion expressed. So before valuators can do that, we need to make sure we have enough supporting documentation to be able to do our calculation. So, and sufficient information shall be gathered by such means as inspection, inquiry, computation, and analysis. And to make sure that the valuation report is properly supported. And valuators, when they're determining how much evidence needs to be collected, we have to exercise professional judgment, considering the nature of the valuation, the type of valuation report being provided, and the uses of the report. So as I said, those are sort of being tightened up a little bit in the new standards. However, the new standards will say something to the effect of it must be based on sufficient appropriate information given the intended purpose and intended uses. Valuators and experts have to consider the extent to which the scope of review has been limited. If any scope limitations are significant to a degree that they are likely to jeopardize the credibility of the conclusion, we cannot render a valuation conclusion. So that's, that was, some people will argue that that's in the existing standards inherently, but it's really clear now. And the exposure draft expands a bit on what is scope limitations, what's significant, what's not, that it's ultimately judgmental. But it gives a couple examples. One is, as Paul said, unavailable financial statements probably means a scope limitation. Unavailable data or key documents, inability to speak to management about relevant aspects of the business, which is interesting because in a contentious situation, we might be stopped by counsel from trying to speak to the other party, or the other party's lawyer may stop us from speaking to them. And another, currently when the standards say when access to essential information is denied by the client or some other party or is otherwise unavailable, any conclusion should be qualified and the limitation of scope should be considered. And as I said, that's existing standards, but the current standard or the new standards coming in are even going to be stronger with that. The exposure draft also expands some of the things to consider. So one of the general areas we have to consider, what are we valuing? So what's the subject? And the exposure draft talks about potentially key documents and information might be interviews with key management, articles of incorporation, share features. We also have to look to the underlying business operations and get enough understanding of that. So that might be looking at ownership, history, key management, looking at historical results, future expected results, the industry, competition, market conditions, market transactions, general economic conditions. And in general, the practice standards require, both on the expert side and the valuation side, require that we specifically outline what we have used. And as I said, the scope limitations as well. So over to anything you guys want to add, Paul or Jason?
Yeah, I want to emphasize in one thing, Melanie, you said speaking to management. And I think that's a very important issue that we often, when we're on the opposing party of management, we think it's very important to try to speak to management. And I find it frustrating when they won't talk to us. I think there's a lot to be said. So I thought that was a very fair comment to make. And the other one is that there is no, and within the standards, they don't actually have a specific list saying, well, if you move to an estimate or a comprehensive, you must look at document A and B. It all comes back to judgment, and it depends. But you emphasize that there's a trend. You should look at more as you move up in levels of reporting. You should look at more documents.
And I know it can be frustrating. I had a situation where the court order was for an estimate level, but the other valuator did a calculation. So then the question was, what's going to change? And I assumed that the valuator, when they upgraded to an estimate, would look to something to support the real estate, which was actually the real estate value, which was actually the most significant component of one of the company's values. But the valuator didn't change it, still relied on what management told them was the value of the real estate. So my judgment would have been I would have gone out and got an appraisal, whereas the other valuator thought that wasn't necessary. So it's still professional judgment, as you said, Paul.
Yeah, I think that also one about the real estate is a live issue, like something where it in most files it's very, very much a very significant asset, which is why we go to that outside appraiser.
Right. Jason, any comments?
No, I think we've spent enough time on this question. You covered it pretty thoroughly.
So can I
You're
read
gonna
Jason
cover-
for
yeah,
you?
you're gonna cover
I'll read the
another
next question for Jason. So Jason, can you give me any disclosure guidance provided by the federal child support guidelines?
Yeah, I wish I could. I mean, as evaluators, you know, we're open to the standards and the guidelines for some guidance on disclosure. And unfortunately, the federal child support guidelines do not provide a lot of detailed guidance in this area. I did find one section in the guidelines, section 21.1, which talks about income information. And it says that the spouse who's applying for a child support order and whose income information is necessary to determine the amount of the order must include the following with the application. And it talks about personal tax returns for 3 years, notices of assessment for 3 years. And then it just provides a little bit of guidance where different situations, if the person's an employee, you know, they need to provide their statement of earnings. If the person is self-employed, they need to provide financial statements of the business for 3 years. If it's a partnership, they need to provide confirmation of income and draws from and capital in the partnership for 3 years. If the person controls a corporation, they need to provide financial statements of the corporation and all the subsidiaries for 3 years. And if this person is a beneficiary under a trust, they need to provide the trust settlement agreement for 3 years financial statements. So some guidance, I think we would all agree, some basic necessary information there, but not a lot of details and elaboration. Any other thoughts?
Agreed.
Yeah.
It comes back to our concept. It depends.
Yeah.
Right. And what are the sort of issues?
Right. Good. Excellent.
So I think, Paul, you've got the next point, which is, are there any situations that may or will require additional disclosure? And I guess that's over the basic.
Yeah, and I'm going to give you yes. Okay, is the big
good.
global answer. Well, let me deal with valuations for a few minutes, and then I'll sort of roll into Garth. I think it really matters on what are the live issues in the valuation, and what do you like, and what's your valuation methodology. So Melanie gave the comment: if you're valuing your real estate, and if you're valuing a company with real estate in there, getting a real estate appraisal is the live issue. Most valuations, what we're doing is we're doing some sort of capitalization of earnings, and we're normalizing those earnings. So in those normalizations, that creates what I say is a very, very significant issue for more disclosure. Are we trying to normalize for personal expenses? Are we trying to normalize for non-arm's length salaries? Well, we need a lot of information to do that, and where are we going to get it from, and how material is it? Which will depend on which will then lead us to how much disclosure we need. So I wrote down, for example, like if the live issue is unreported is personal expenses, we're going to want to go and look at, we either want to ask the client for them, but we may not get an answer, or we're going to want to look at the GL and see what was expensed. And that sort of pivots me to one other concept: is financial statements are the top level sort of reporting for a corporation. In order to create financial, there's underlying documentation. The next level down is a trial balance and a general ledger. And a general ledger is where they record all the transactions. Then below that is the actual source documentation, purchase invoice, sales invoices, computer information. So if you trust the financial statements, you may or may not to delve down. But a financial statement, even if they're audited, all they're going to say is, yes, we sent expenses on automotive, for example, but it's not going to tell us what the detail is, and we'll have to drill down to sort of figure that information out. Right. So yes, from most situations require us to delve in and need additional information. And there could be, even on evaluation, sort of industry specific information that we want to know about, and it's really relevant for that file. And then it's quite actually the same thing for a guidelines income. We'll have guidelines income may or may not have a live issue. The typical live issues I find are unreported income and personal expenses. If those are live, we're going to want to look at a lot of additional documentation to deal with those. If they're not, then we're not going to need all the documentation in that area.
Yeah, I would agree with Paul on the answer is almost always yes, because, from our perspective, we are going to request a certain amount of information or documents initially, but inevitably, once we receive and review those documents or information, we will oftentimes have follow-up questions because we need to understand. So you can almost always expect additional disclosure after the first round or batch is provided.
Yeah, totally agreed.
So you want me to read it? I'll read out the next question if we're ready.
Which just kind of fits into that. Goes right into this.
Okay. So what if excessive or unreasonable disclosure is being requested?
So that's an excellent question. And I'm sure that both Jason and Paul have faced this, where a lawyer calls you up and said, the other expert sent me a 50-page disclosure list. I want you to go through it and tell me what's unreasonable. So I guess first of all, the definition of excessive and unreasonable is subjective, right? And it can only be judged on the circumstances. So I always, that's a troubling thing when someone asks me to do that, because I may not have all the information, or I'm not in the other expert's head to know what is driving these requests. And in general, my underlying assumption is anyone like Jason or Paul who have some experience or a fair amount of experience and they know what they're doing, if they're making a request, there's usually a good reason for it. So it's very hard, and those letters I usually say no, I can't write those. Unless for some reason sometimes the expert has already been, or the other side has already received information. It may have not have gone to the expert, so the expert may not be aware that there actually has been disclosure. But anyways, the first thing is, what is excessive and unreasonable? And who has access to what amount of information? So another thing that sometimes I get asked to do is, if I'm making the request and the lawyers are anticipating, the counsel I'm working with is anticipating that they're not going to get all the disclosure because the other side is difficult, or there's time deadlines looming, or whatever. And they'll ask me to say, well, you tell me which ones are imperative and which ones are nice to have. And that is also a very discomforting question, because I usually say, well, hold on, I'm not going to make a request unless I think it's warranted, right? I'm not just going to throw in things just to make someone's life difficult. I usually, on that list, there's a reason that I'm asking for it. So it is a very troubling thing, and it's not. So I find often it's not the expert's role to say the other expert is being unreasonable. That's my general thought. I don't know, Jason, Paul, do you agree?
Yeah, it comes back to it depends on what people are thinking, right, and what the live issues are, right? Yep. And sometimes their client has created a live issue, right? They said, I'm very concerned about X. So that drives a lot of questions.
Yep. Well, and I guess another one little comment to add in here. I think it also might depend on the type of format you're in. If you're in a court proceeding, or you're in in a mediation or you're in a collaborative situation or whatever, there may be a slightly different need for amount of disclosure or what's reasonable or unreasonable. That may be another source of reference.
So I have a question for the two of you, and I want to get your thoughts on this. I tend to look at documents differently. Is it an existing document, or is it something that needs to be created for the family law process? And how do you guys feel about that? Like, is stuff that needs to be created, is that a different fair, like, is there a different level of one being more fair game than the other?
Agreed. Look, if something is already being prepared or is in a report that you can just simply provide it. There's no trouble to do that. If it has to be created, like, then it becomes a question of, well, what's the cost benefit, right? Like, how much time and effort is it going to take to create that document that you're looking for versus the materiality of the issue that we're talking about?
Yeah, I totally agree. And I guess the other, sometimes I see request lists from the other experts when they're asking sort of opinion questions from the other side, like where is the business headed? What do you think? What do you think the revenue is going to be like, and such like? And that's always troublesome because that's not a document. And in theory, that should be covered by an interview, right? And maybe both parties are involved, but that's always a troublesome one as well, because who knows, those are opinion, right?
And then I had another one I little jotted down is sometimes information, like when they're asking for information that really is being asked for to provide corroboration that the financial statements are correct.
Yeah, that's an interesting, and sometimes that's fair, right? And that goes back to your point, Paul, about do you trust the statements? And I don't know about you guys, but what percent do you think your files involve not relying on the statements?
It's a good question.
A lot, a fair amount,
Well,
probably.
that's sort of putting it in context too. Are we dealing with a small business, a big business? Right. Do they have partners, not partners?
Is it audited, reviewed, filed, GIFY, whatever?
Like if you have audited statements and there's a lot of partners and there's institutional investors, it really reduces the sort of the probability of there being personal expenses in there.
Right.
Versus when they solely own the business and they have huge amounts of, let's say, just looking at it, of promotion expenses or automotive or vehicle expenses.
Great.
Okay. Jason, I think you're up, right?
I think there was another poll, wasn't there?
Oh, okay.
Poll number 2.
Oh, yeah.
What is a reasonable amount of time to wait for disclosure in the audience's experience? I don't know if Daphne, if you can help us out with that.
Yes, that's right.
Daphne, who looks exactly like Russell. I'm shocked. Okay. Not sure if
the poll is running. I'm just giving the audience a chance to answer. Do you guys have it open, or would you like me to read the results?
Yeah, please read. I'm
Yes.
not sure how to access it.
Yeah, absolutely. Okay, so what? Oh, no, that's a different poll. Sorry about that.
While we're waiting, I'll just maybe put a couple other comments to you guys or questions to you guys. So, in disclosure, I guess we'll get into talking about scenarios and adverse inferences in some of our discussions, but how to deal with the lack of disclosure, I guess we will get there.
Yep.
Okay, so what is a reasonable amount of time to wait for disclosure? 1 to 2 weeks, 18%. 2 months, 82%. 6 months, 0%. Anytime before next solar eclipse, 0%.
Is that a little encouraging, guys?
And I'm gonna tie that answer into like the longer it is, like the harder our job is. Like you write a letter and then it sits on the shelf for 2 months or 3 months. And then you gotta go back, you gotta find out what's going on, and it just runs a lot of fees and a lot of time.
Yep. Yep. So the next question we're dealing with is how long is it reasonable to wait for disclosure? So we've been talking about sort of what disclosure constitutes, but now it's how long is reasonable to wait for disclosure. And not surprisingly, I think we would all answer the same way. And it depends. It depends on a couple of things, right? It depends on, the scope of the engagement that we've been retained to do and the extent to which there are contentious issues that we have to investigate. Like, are we doing a quick high level review of documents and then giving sort of some preliminary thoughts? Are we doing a standard report in accordance with the guidelines, or are we doing a forensic review, right? Those are each different creatures. Also, I think it depends on the complexity of the situation. Like, are there multiple companies involved? Is there a trust? Has there been a lot of tax planning things that have gone on? Capital gain strips, like complicated stuff that, may take some time. But I think if we're talking about sort of an average assignment, so not high level, not forensic, like I don't think it's unreasonable to expect 2 to 4 weeks a response, maybe a month. I think the most popular response was 2 months. So maybe 1 to 2 months. I guess we have a subset question here. How many follow-up requests are reasonable before the expert should involve counsel? I think this is pretty common. It's common for us anyways, in that we provide an information request and we get no response. And so how often do we follow up? How frequently do we follow up to make sure that we're continuing to manage the process and move it forward, but still allowing a reasonable amount of time for them to gather the information? I'll typically follow up a couple of times, and if I'm not getting any response, I'll throw it back to counsel.
So, Jason, I want to add a comment on that, is that even when I'm doing these kind of files, valuations, and it's my own client and it's non-litigation, they take time often. And sort of my sort of experience is if they don't deal with it in about 10 days, like short of them being off work or their staff member, their key finance person being off, then they're not dealing with it. And then as soon as I send that reminder, we get an answer within about 48 hours. And the other one is I find current year information. Sometimes it's not ready yet. So they hold up the whole process because we're waiting for the current year information.
Yeah. And I'd say
go ahead, Melanie.
I was just going to say further to that and further to Jason's comment about it depends. You often have to consider the factors. If it's a sole business owner who's trying to running around all over the place and maybe doesn't have a good accountant or a strong support network, you're going to have to wait, or you're going to have to help them out, or they're going to have to get someone to help them out. So that's often part of the reason, and it may be just they're balancing too many balls in the air, and it's not that they're trying to avoid disclosure, they're just having trouble getting to it.
Yeah, I agree with that. And I find oftentimes that when I'm working for the business owner and there is no pressure from the other side or deadline to work towards, I will not get a response from my own client. And I could follow up every couple of weeks, and it's just not a priority because it's not a pressing issue. So those are tough situations to manage.
But that's when you call the big guns like Russell and say, I need your help. Write our client a letter.
Yeah.
Push
All right.
So we're on to
we're good with that.
We're on to the next one.
Read it off. Yeah.
Number 7.
Yeah.
Sorry, Daphne, were you going to?
Yeah, if you'd like to do poll 3, we can do that now. So in your experience, how many requests are made before a full financial disclosure is completed? And I see some results coming in. So percentage wise, we have 1, 3%, 2, 42%, 3 to 5, 50%. It's climbing. People are still voting. It's climbing the numbers. And to the point, I think it is spam, 7%.
So I think the takeaway from that is that there's usually multiple sort of rounds of this.
And one thing I find with clients, whether it's just litigation, family law, or not, is that you have to you have to get an understanding of your client. If you're the one making the request, get an understanding of what pushes them, and if there's a person, if there's a third party or like a support person that can help them out, or whether they're just the type that Jason said you keep sending emails to trigger them, or whether a phone call. Sometimes just pick up the phone and call them rather than sometimes people turn off their minds to email as if they're getting too many. And if you pick up the phone, that might actually work. So I think it's also understanding the client and what the best way is to get the information from them.
So are we up to number 7, which
Yeah.
is
Oh, yes.
what are the next steps if disclosure is not provided or not expected to be provided?
So I think of this as sort of two, we can either go in two directions. One is we push sort of the court to help us, right? Ask for disclosure. And that's, I always go from a valuer's perspective. We just say, oh, can you make this happen? And then we sit on hold and somehow it shows up or it doesn't. And then, so that's the first one. So it's, there's some sort of motion. And my understanding is, and my experience is, generally the courts are pretty favorable. Like if we ask for something, the courts will compel them.
Mhm.
And then if you don't get it, sometimes we'll get instructions that you're not getting it. Assume this is like, just finish your report with what you got. And, we'll have to caveat or qualify the report. It only bothers me when it's situations that it's sort of garbage in, garbage out. We know it's limited and there's a problem there. And we have to work around those situations. Like Melanie and Jason, thoughts?
Yeah, I totally agree. And that may be where you have to make assumptions. And I think we have to be careful of when we make assumptions and who drives those assumptions. And, the standards have tightened up, I'd say, and probably the court cases have too, say that maybe, if there's more than one reasonable assumption, then you get into scenarios and we're not siding on one assumption per se, but if there's more than one, let's do it and let someone smarter than the experts decide on what the appropriate scenario is. So I think that has become a big, I don't know about you guys, but I've seen that as a big issue in the last couple of years, doing scenarios that are reasonable scenarios, not 300 scenarios, but reasonable.
Yeah, I agree with both of you. I think if disclosure is not being provided and we're asking for something, obviously we feel we need. If it's not being provided, I've been asked to make assumptions and draw adverse inferences. It could be with respect to, verifying or confirming share ownership. It could be with respect to assumptions around personal expenses or unreported cash income. But I have had to make assumptions and sometimes scenarios like you suggested.
Right. Now, I don't know about you guys, but when counsel asked me to make adverse inferences, again, that's a little discomfort because what does that mean, adverse inference? What exactly do you, and sometimes with adverse inferences, even if we can get direction on what that should be, so don't you sometimes need some documents or something to go on, like as opposed to just picking something out of the air. So sometimes that's adverse inferences are a little problematic, but I don't know about your thoughts, guys.
I was gonna say is like there's certain stuff we can't render an opinion. Like if you don't have financial statements, you can't render opinion. But sometimes you might be missing personal expenses is a great one, Jason, that you mentioned. But sometimes it's just not that, it may not be that material. Business makes a lot of money, and whether it moves 50 grand one way or the other, like there are cases where there's hundreds of thousands of dollars of personal expenses, but typically it's not in that range. So if we're off, right, by 25,000 a year of income, it might not necessarily move the needle that much.
Yeah, good point.
So let's move on now. So what are we in, number 8? Okay.
So
yeah. So what if the requested or required disclosure simply doesn't exist or is not reasonably located?
So we're now at the point where we've done our gazillion request letters, and it's we either get the response, it doesn't exist, or someone says, let's stop it. We got to get a report out by whenever, you just have to move on. So there's lots of reasons why disclosure may not exist or not reasonably be located. It could be just due to the passage of time, like marriage date was 30 years ago and nobody keeps documents back then. Document destruction based on, you only have to keep them 6-7 years, and so that's appropriate. It could be I've had situations where the lawyer has died or the accountant has died, and the documents may exist, but no one can find them. And I've also had the situations where, my spouse took all the records and it's his or her fault for that. It's like, okay. Or I just don't understand the numbers, or my partners won't agree to disclosure. So lots of reasons that it may or may not, but you have to get to that point where, like experts, we keep optimistically making requests to hope we'll get it eventually, but at some point you may realize not. So the first question is, as Jason alluded to, is how significant are those missing documents, or how significant could they be? Sometimes you don't know. Sometimes you can judge, sometimes you just don't know. And because it may be, once you have them, you can judge the significance. Sometimes you can't. But as Paul said, if it's a big enough company, there's lots of partners or audited statements. If you can't get GLs and supporting documents, it may not really matter because there's probably not a big risk there that the personal expenses are significant. So the next step, I think, when you realize is, can there be are there any other documents or anything else out there that can replace the missing documents? For sometimes I've been lucky enough where there weren't old financial statements, but there was a valuation done years ago for estate planning, and someone had summarized the statements around that date, so would use those. I mean, you sometimes luck into that. Or you don't have a breakdown of the historical management remuneration from the salaries and benefits expense, but maybe if someone happens to have kept their tax returns, and I've had shareholders say, well, there's 3 of us and we always took the exact same amount out. If you can find one, then you might be able to multiply by 3 and you're good. But at some point, you have to decide if you can't find anything to replace, you got to decide how significant it is, and then whether there's a limitation that needs to be added to the report, whether assumptions can be made, or whether scenarios can be utilized, or whether you can't even render an opinion. So the exposure draft that I'm talking about, we've always had this issue, maybe not issuing a report, but I think the practice has generally been, even if it's potentially significant, we've rendered opinions and made assumptions. But the exposure draft, the CBV exposure draft, is really saying that significant scope limitations must be identified in a prominent manner in the report and adequately explained, setting out the reasons for the limitations and their potential impact. So a lot more transparency, and that's exactly what the standard said. They want more transparency on these things for users. And then the exposure draft also requires that any scope limitations that are significant to a degree that they're likely to jeopardize the opinion, the conclusion, valuators can't issue a conclusion. So that right now is something that a lot of valuators are saying, oh, I'm not sure quite how to deal with that in some cases. So it's going to have a little bit of time to wind through, and valuators to figure out what that exactly means, and if we have to stop issuing conclusions in some cases.
Melanie,
Yeah, I've
go
had
ahead,
to
Jason.
say for, marriage date valuation situations, if you don't have financial statements for the company at that time, I can't do a report. I just can't.
Yeah, I found marriage date, we often can support the book value, but then we can't do what we can't normalize, because we don't have any information about salaries, personal expenses, non-recurring events. Like, the records just don't exist. So you can kind of get an answer, but it may be understated.
But at least it's something, right?
It's something, yeah. And it sort of works, it almost works against the party that's asking you to do the date of marriage.
Right.
The date of marriage credit is being understated. My sort of takeaway is there's always more we can have, but if we have financial statements and we don't think that there's a big gap in our normalizations, right, that we're missing because we can't get the source documentation, then we're kind of in the ballpark. But if we had the exact, you can always search for more documents that may create evidence that will change your opinion.
Right.
You know, and I'm going to give a perfect example. We start off and we usually assume the financial statements are correct and we don't delve down into what's on the balance sheet. But maybe there's an inventory problem that if we could get a whole bunch of inventory source documents, and we think there's an inventory problem because one of the partners said there is.
Mhm. Yeah.
So I think maybe we should move on just because of timing. So order on number 9.
Mhm.
Yeah.
So Jason, I'll read this for you. What if the client is a minority inactive shareholder and is uncomfortable getting other shareholders and staff involved in his or her family matter and requesting information documentation?
Yeah, this is a good question. And it's one where I don't think you can use the excuse, well, I'm only a minority shareholder. I don't have access to the information. I can't provide it. I don't think you can use that excuse, or sensitive information. My other shareholders don't want it out there. I don't think you can use that. I think that there's an expectation and a legal requirement to provide a certain level of disclosure if you're a shareholder, even a minority shareholder. And I mean, correct me if I'm wrong, but I think minority shareholders are legally entitled to certain financial information or disclosure about the company.
There's one thing I'll just mention here. I saw an OCA case come out recently that basically says if you're a minority shareholder and haven't followed up historically, you're subject to the statutory limit, whatever it is, 2-year limitation. So that creates an interesting thing. So what if it's someone who is minority and hasn't requested financial statements historically? They may only be entitled to go forward information based on that case.
Yeah. My view is always too bad. You need to provide it. But I have had files or situations in the past where it's become a real issue and it's become a legal battle between counsel, between the sides on the sensitivity of the information and redacting certain information and providing information. And ultimately, I guess the parties have to agree, or a court will step in and provide a motion on. Yeah.
I think this is a case where a court can be really beneficial. Like,
Yeah.
I'm the majority shareholder. I have a 12% minority shareholder who happens to be my sales manager, and he wants this, this, and this. And sometimes you don't know what's going on behind the scenes, whether it's wink, wink, like make it difficult. As soon as the sort of majority shareholder sees a court order, they're usually more likely to comply and be cooperative.
Yeah.
Right.
Yep. Yep.
No more polls, right, Melanie? We're good with that?
No, I think we're done with polls.
Yeah. And then I think we got one more. So someone want to read off the question?
Yeah, I can read number 10. So what if the business owner is concerned about sensitive information, privacy, confidentiality to the former spouse, to the general public, if the matter is in court, etc.? Paul, any thoughts, comments?
Yeah. So I think this is a really, really fair comment for people to make. One of the things I like to say is we are all, the 3 of us and all the lawyers, we're all governed by professional confidentiality.
Yeah.
On top of that, we have, it's in the engagement letters, like that we'll keep everything confidential. We have a lot of stuff that comes across our desks that we keep confidential and we don't talk. So sometimes the parties just don't know. They don't know that. So it's like, it's good to tell them that and give them some comfort from that perspective. I don't think I've ever been asked for an NDA in a family law. Actually, probably have, but it's pretty rare. And often in my
have too, but it's rare. Yeah.
And in my corporate work, sometimes they ask me for an NDA and I'm like, you don't need one. I'm not going to say a word and we're governed anyways.
Yeah.
And half the time that makes the request disappear. Like people just want to hear it. And once they sort of hear that, they get a little bit of comfort. Next thing is I wrote down is sometimes they want confidentiality from the other spouse. Like they're competitors in a way, like, like they both are in the same business doing something now and they're competitors. So I've seen where there's agreements, like we can look at the documents, but the spouse can't look at it. I've sort of seen that come up. I've seen redacted information, but I find that we often have a lot of, like when it's redacted, there's a lot of back and forth that goes before that's produced. And yeah, so those are sort of the major ones. Like, I think it's a fair comment. We will keep it confidential. Once it gets into court, like, we can't help them there.
Yeah, I agree. And I've been asked to do NDAs in the past, so I think depending on the industry, also of the individual we're valuing, they may be more sensitive. Like the tech industry is more
Yeah, I
sensitive to
find tech
NDAs, for example. But I always remind them that we're all subject to the rules of confidentiality for clients, which doesn't necessarily cover the other side, but of CPA Ontario and CICBV.
Yeah. Yep, agreed. I think it's a good incentive to use collaborative or mediation instead of being litigious and going to court.
Or arbitration too.
Yeah,
I guess.
arbitration
Yeah,
will
true.
get them
Yep,
that
yeah.
protection.
Yeah.
So Daphne, I think we've come to the end, right? And I think we're running out of time now. Yeah, any questions?
I just put into the chat that case I mentioned about the limitations, limitation periods for minority shareholders, OCA court case Lagana versus 2324965. Interesting case. It just came out recently that I don't know if it'll affect what we do in family law, but it might in other areas as well.
Interesting. Thank you, Melanie. I'll be sure to provide that in the YouTube description for everyone watching. In a few moments when the session concludes, you can access the case there. We did have an audience question come in. If we review the documents and those are part of our scope of work, how can we keep it away from the other spouse?
You can't.
No.
Yeah, you guys said you can't.
Can't, no.
Well,
No, if
that's
it's
the
in
only
our-
one is if you don't want the other spouse in, I think you need an agreement up front before we get it. And even
Yeah.
then, I don't even know, like maybe customer names, I think that would probably work, but to keep the financial statements out, I'm not sure that would work even.
Yeah.
Yeah, anything provided to us that we rely on for preparing our report that gets listed in our scope of review. I mean, when we provide a report, we're always asked to provide the scope documents because the other side's entitled to them.
Excellent, thank you. One more came in. What is the absolute minimum disclosure you need to complete a business valuation or income assessment?
Do you want me to do this?
Two words?
Why don't you do income
Sure.
2 words? It depends. Yeah.
Yeah.
No, but I think the bare minimum is we need to see the financial statements.
For
like in
sure.
tax, and for
For sure.
guidelines income, the personal tax returns.
For
If you
sure.
just don't have the personal tax returns, it's a made up number.
Yeah. Yeah.
And another one here as well. How do you respond when the other party is requesting disclosure that feels excessive or irrelevant?
Should I take that? Because I covered that
Sure.
in the, so you guys feel free to add in. I very carefully, I mean, I prefer this to be the lawyers responding to this as opposed to me as an expert saying another expert is asking too much. If it's not an expert asking on the other side, then someone who isn't experienced with family law, that may be a different issue. But I would prefer I'm not asked to write letters to say it's excessive, but I might give comments to the lawyer that says maybe this is an area that doesn't need to be reviewed because it's insignificant, but most of the time I find other experts' requests are not unreasonable.
I always tell my clients when they're provided an information request list from the other side and they want to get my thoughts on, is it reasonable? I always say, I mean, to the extent that it's available, it exists, and it's easy for you to access, just give it.
Mhm.
Just give it. If it's something that you think you'll have to search for, you'll have to create, it doesn't exist, then just be truthful and just provide that as a response.
Yeah, it's our job's a lot easier when they say we're not providing this because it doesn't exist or it's not applicable. Then we just think they just ignored us, right? And you, Jason, reiterated on it. Does it exist or does it need to be created?
Mm.
And I think that actually reiterates or reinforces one good point, is that it's a good idea for council to get the experts involved initially on the request and maybe help with, sometimes it's experts request, another expert understands the request better than someone else. So if you get the expert to help out fulfilling the other expert's requests, I find that makes things run a lot smoother and less suspicion sometimes that one of the clients are trying to hide things. And we speak the same language, so it often is a lot easier that way.
Thank you. We have just a minute left, so just a couple more audience questions if I can get them in here. So this one is, due to information limitation, if we cannot issue a conclusion, can we then issue a letter of information received with the facts of the documents without any implied conclusion to assist court?
I don't see why not. We're basically saying we didn't issue an opinion and here's what we're missing. I think we do that a lot.
Excellent. Okay, I think that wraps up our session today. So thank you so much. I just want to express my gratitude to Paul, Jason, and Melanie for sharing your time, expertise, answering audience questions. I think it's been a really helpful session. So thank you so much to all of you for your participation today.
Thanks. Thanks everyone
Thank
for
you.
listening.
Thank you.
Thanks for having us.
Okay,
My
bye.
pleasure.
Perfect. Thank you.